Welcome to 44 episode of the Ark podcast. We have an amazing lineup of guest speakers to talk about crypto and gold.
Australia's obsession with real estate will be the death of the middle class. If you want to become wealthier than those who make the rules, then you're above the rules.
He thinks it's because of the anti-money laundering laws. The banks are overcorrecting. Is that really what's the situation?
More than half of the Australian Electoral Commission voter base, registered voters in this country, are reliant on the government for their income.
This central bank digital currency you're talking about is fully programmable. It is geo-fenced, geo-timed. It has a negative interest rate applied and it expires. So if you don't spend your currency, you will lose it.
For me, as a business, I have not been provided a reason for my debanking in each of the scenarios in which I've been debanked. They don't have to provide a reason. There's no law that says they have to. It's within their terms and conditions. And if you call up AFCA and you make a complaint, great, kick rocks.
The government wants more people eating out of its hand because the more people that are reliant on you, the less likely they are to rise up and have a revolution that I keep hearing about, because we are too reliant on the teat of the government, and I'm sick of it. Bitcoin is to the banks what email did to the post office.
Nothing will teach you value about a currency more than its inability to buy you anything, and the Australian dollar / US dollar are largely worthless.
We are so close to hitting escape velocity, and that's why there are so many problems with the banks and the legacy financial system, is they feel the walls closing in.
$5,000 debt that you have is your problem, but if you've got a $50 million debt with the bank, that's the bank problem.
Yeah. We're past the point of no return, and what I mean by past the point of no return is that we're going into hyperinflation. Hyperinflation is something that people in the West have no real idea about it because it hasn't happened to us for over 100 years, and that's the problem.
All right, ladies and gentlemen, welcome to 44 episode of the Ark podcast. We have an amazing lineup of guest speakers to talk about crypto and gold. What stories are we going to be covering for you today? Well, firstly, we've got an absolute exclusive from some of our panelists talking about how banks are targeting crypto and gold companies specifically. What are the impacts of anti-money laundering laws for gold and crypto in Australia? Why has gold surged to record highs around the world? We examine Bitcoin's volatile recovery. How has Bitcoin's volatile recovery impacted the market? But also, what is the impact of Trump's tariffs on gold and crypto markets? What are the top tempting alternative coins gaining traction? And which promising gold and crypto stocks should you keep an eye on? With me today on my far right, I've got Tim Manger, who's actually from Beat the Reset Online. I've also got Bisher from Stormrake, his third time here. I'm excited to chat to him about, actually fourth time here. I've also got Sam Laurie on my left from Liberty Bullion. Gentlemen, it's been too long. I've missed you guys, and you have been under some intense attacks. Just before we came online, we were talking about censorship from social media, digital ID, banking, taxation, red tape. Sam, I need you to start me off. What the hell has happened to Liberty Bullion? What did you say, 2 bank accounts?
So we've recently been debanked for the second time. So we were debanked for the first time a month or two ago when I was in the US. The bank decided to freeze my accounts when I was in LA. Had a massive battle with them. They ended up shutting the account completely, debanking us, saying we no longer want your business, which is interesting for a business that's done $70 million in revenue over the last year or so. You'd think at a successful business, a bank would want that business, but absolutely not. So that was the first bank account. Then we got set up with another bank, which was fantastic, great news, rebanked, awesome. That lasted about 2 weeks, and we've just been debanked for the second time. So yeah, this isn't just us. We're not special. This does apply across the entire bullion industry. Other bullion dealers have faced similar sorts of things in the past, being debanked. Even my suppliers, the refineries that I buy my gold, silver, and platinum from to sell to my clients, they've been debanked in the past as well. So it applies right across the industry, all the way up to the very top of it. And it's great fun trying to run a business without a bank account. We do have solutions in place, so there's no need to panic there. But yeah, it's certainly a challenge in terms of running a business.
It's ridiculous. Like, can I breathe, for God's sake? Can I actually, like, live and make business and pay the taxes that you run and are paid off as politicians? Because you're funding these guys that are doing this.
And I don't want to speak too much about how much tax I pay, but it's a large amount of tax. We're talking hundreds of thousands of dollars a year. On top of that, I employ 6 people. I pay their salaries. We're talking north of $500,000 a year in wages every year. Income taxes apply to all of that. And then my clients who buy these assets and will one day sell them for a massive capital gain and pay massive capital gains tax on that, again, more tax revenue for the government. So at every point along the way, I'm contributing to the Australian economy and helping the lives of fellow Australians and putting tax dollars in the pockets of the government. And I see no benefit from that as a citizen. If anything, it counts against me. Being successful in my line of work is not a good thing from the bank's perspective.
Thank you for sharing that. I appreciate it's a very sensitive topic and it's still ongoing, but I appreciate, like, you've been very accessible to people if they needed to get in contact and they're clients of yours. You've been handling it really well. But Bisher, you're in a similar situation, slightly different. What's been happening on your end, censorship-wise, with accounts and all of that?
It's a fantastic question, and honestly, it's not that dissimilar what we're going through in the crypto industry. The bank's treatment of us is quite harsh. We're coming to the team to the conversation with an open book. We have nothing to hide. We're here to help people purchase and sell digital assets through a simple phone call or email. That's the service. That's it. And we're continuously getting debanked. So far, I won't name names, we've been debanked from 3 institutions. One of them is a big 4 institution, the other one a couple of regional banks. And now we're using payment service providers in order to be able to fund collect our clients' funds to then be able to trade and secure their investments. So we're still operating as per usual, business as usual here on our end, no problems. But even when we've moved away from the banks, because they've sent us letters saying we don't wish to do business with you, no problems. We're a pretty smart and innovative company. We moved away from the banks and put together a couple of regulated payment service providers to be able to facilitate our clients' transactions. Then on the back of that, they make the transfer, the client initiating the transfer to that account, really difficult. And so even though you move away from the banks, they continuously make your life quite difficult as well. So, but that's okay. Nothing worth having came easy, and we're here to actually persevere and push forward. And a lot of people are saying, well, it's because crypto is an unregulated asset class in Australia at least, and there's a lot of regulatory ambiguity, and that's why you're facing what you're facing. Prior to being a crypto broker, I was in the foreign exchange and CFD industry. I was a CFD broker for many years. I was the head of sales for a company called Capital.com. They're a large multinational FX and CFD broker. We got debanked as well, despite holding our own Australian financial services license. And we were a fully regulated entity. We had our own Collins Street office, complied with every single regulatory requirement from ASIC to the letter of the law, and that still had us getting debanked. So I don't see crypto becoming regulated by ASIC and requiring an AFSL, which may come at some point, changing the bank's treatment of our industry. And it's I'm super grateful to be on this platform to bring light to this issue, because nobody's really talking about it. Everybody's really concerned to kind of elevate their voice and step up and say, this is a big problem. We cannot be treated like second-class citizens. I've been personally debanked by one of the big 4. And they kicked me off. It happened when I was in Thailand with the family. I was with my wife and 2 kids.
Kick you while you're, vulnerable,
But look, to be fair though, I'm a full Bitcoiner, so I never really lost anything. So what happened for me in the end was I had a few $1,000s worth of Bitcoin on my hot wallet. I can show you guys this now as well, because I always love holding BTC and showing how accessible it is for people. But I've got it. Hopefully we can get a camera on here. But I've got a bit of Bitcoin sitting around there.
Yeah, we'll get camera.
And that's really easy for me to be able to move my funds around anywhere on the planet. This is a hot wallet, And I can just show you guys how easy it is to use Bitcoin anywhere in the world.
Right.
Now, I've got currently there about $13,000 worth of Bitcoin. It's about 0.078 of a BTC.
Right.
So when I was in Thailand and I got this letter from the bank saying, we no longer wish to have you as a customer, effective immediately, your cards will not work, you've got no access to your accounts. I called them and I said, guys, I'm overseas at the moment. If you don't want to have my business, that's okay. Let's just let it run until I come back home, and then we'll go from there. They said, no, effective immediately, you can't use anything. I had about $500 in the account, which didn't really faze me at the time that I had lost it, because I always advocate to my clients have as minimal exposure to the banks as possible, and I apply that advice to myself as well. So what I did is, who's been to Phuket, by the way? Beautiful place, right? I recommend it, Joel. Sure. You should go.
I haven't done Asia. A lot of people say it. A lot of people say go to Asia, go to Bali. Yeah.
Southeast Asia is amazing, particularly Thailand and Malaysia. I've got a soft spot there. Anyways, moving on. So I went down in Phuket, in the heart of it, it's an area called Patong. And in Bangla Road, which is the main strip, there's a crypto and Bitcoin dealer there. So I converted 0.03 of a BTC into 90,000 Thai baht, got cashed up. Man, to give you an idea as to what that Thai baht gets you, I took my family, my wife, my 2 kids out to the Similan Islands for a day trip. Beautiful, like I'm talking about crystal clear blue waters, white sand, everything paid for, pick up to and from the resort, everything.
Yeah.
4,000 Thai baht.
Wow, and you had 90,000.
And
you're just hanging out.
Just hanging out, and it was that was
0.003?
0.03 of a Bitcoin.
0.03, right?
Like, and it's like you can't be touched.
Yeah.
You are literally like Superman when you're on the Bitcoin and gold standard, because they just can't touch you. These assets are globally recognized, super liquid, and it's
Gentlemen, let's take it a step back. Why is this happening? Because when I got a call from Sam a couple of weeks ago about this, I said, mate, it sounds like what's happened to my mate Bashara. He runs Fundo, great short-term loan company.
Yep.
I went to school with this guy. He was 3 years older than me. I always looked up to him. He's a good Lebo. I like him. Now,
one of the few good ones. I can say that, by the way.
But he's a guy that got debanked. He told me for the first time on his podcast while I was there. And it's like, why? It's not crypto. It's not gold. See, there's a bit of a tainted reputation with this stuff. But lending, short-term lending, an Australian citizen, grew up here. You know, his family's here. He's set up this company. It's not even like one of these different asset types. I don't know if you ended up speaking to. I might not have connected. Yeah. But why is this happening? He thinks it's because of the anti-money laundering laws. The banks are overcorrecting. Is that really what's the situation?
Absolutely. So we've been looking into this a lot. There's been cases in the past where other bullion dealers have experienced similar things. And essentially, coming down to it, the government has passed this AML, anti-money laundering, counter-terrorism financing legislation, and they've put the onus on the banks to be the police.
Right.
So the banks have these huge compliance costs with following the law that the government has pushed on them. And for companies like ours that see really large transaction volumes, and this is the key as well, I'm debt-free. I don't have any debt. I don't have a mortgage. I don't have a line of credit. I have nothing, zero debt. That works against me. When you look at the refineries that I've been speaking to or other bullion dealers, I ask them, hey, this is happening to me. How do you guys still have accounts? The answer I get every single time, the reason we still have our accounts is because of our debt facilities. I have, speaking to my refinery, he's been debanked from 3 different banks. He's on his last bank now. The reason that he's still there after the time he's been is because he's got 3 mortgages with these guys and then a bunch of other loans as well. He is a profitable client to them.
Right.
So if somebody like me, where loads of funds flow through the account from clients out to refineries and suppliers, et cetera, I'm not a profitable client. I hold zero debt. They make $0 in interest income off me, and they have these huge compliance costs. So my plan going forward as a business owner with my next bank account is to get really deep in debt. I don't want the debt. I don't believe in debt, but I need to do that in order to maintain a banking relationship. I need to be a profitable client.
Sorry to cut you off, but someone once said that line. They said, look, a $5,000 debt that you have is your problem, but if you've got a $50 million debt with the bank, that's the bank problem. So they bring you out, they wine and dine you, they put all this food on the table. Sorry, what were you gonna say?
Yeah. So another point as well, because that's one really important point as to why this is all happening. It's legislation from the government. They're forcing the banks to play policeman, and the banks are not here to muck around. They're a law unto themselves. There is no regulatory oversight over their debanking. For me, as a business, I have not been provided a reason for my debanking in each of the scenarios in which I've been debanked. They don't have to provide a reason. They don't need to. There's no law that says they have to. It's within their terms and conditions. And if you call up AFCA, the Australian Financial Complaints Authority, and you make a complaint, great, kick rocks. So there's no recourse. But I guess where I was going as well, there's a second angle to this, which is businesses like mine, businesses like Bisher's, Stormrake, and also to an extent, businesses like your friends, we're all competitors to the banks. Right. So for Bisher and I, it's on the asset side. For your friend, it's on the lending side. So for us, people in general can either hold their funds in a bank account, or they can hold it in gold or silver or platinum or Bitcoin or some other cryptos. So for us, we're stealing business off their plate, and we know that.
I just want to continue on that point. The problem is anti-competitive practices, right? And so we have this airtight, super compliant solution to allow people to on-ramp and off-ramp into Bitcoin as they see fit and into other cryptocurrencies. But the banks are choosing who can and can't make that decision, right? Yeah. And they're deciding, at broad brush, which industries are allowed to operate in this country. That's anti-competitive behavior. Yeah. Because look, Bitcoin was designed, its very creation was to replace the banks, right? I just want to be very clear about that. The Bitcoin is to the banks what email did to the post office. Bitcoin is to the banks what the car manufacturers did to the horse and carriage, right? It's really important to understand that these legacy institutions will not be around in 20, 30, 40, 50 years' time. Or if they are somehow able to survive, it would be in a far more limited capacity and maybe just reduced to being mortgage lenders, right? And that might even be taken away from them with the way Bitcoin lending markets are developing and the way gold lending markets are developing as well. You mentioned your friend Bashara, who has the alternative lending facility as well. These solutions are going to become more and more popular. And the collateral assets that will allow short-term lending and even mortgages, long-term loans, will be funded and collateralized with Bitcoin, gold, and silver. And so when that happens, it's like, what's the point of having a bank account? Yeah. What's the point? And that's the problem that we're facing. It's completely anti-competitive behavior. And at some point, we will look back on this 5-10 years from now. There'll be a pretty significant inquisition into these cases.
Tim, you've been sitting there patiently. What's your take on all this, hearing this happen, not only to your mates, but to just to businesses in Australia?
Well, mine's two things, historic and futuristic. I think these boys have nailed it. In order to understand what's going on now, can I plug my new book, which is about to be released? I've got a brand new book.
I'll chuck it in the description when we come out, absolutely.
It's due for release in October this year. We're on in fact, the boys and I will be going on the Great Australia Book Tour after we are at the Gold Conference. Bit of a plug for our beautiful friend Kerry Stevenson. The reason you're seeing this is in my new book called 2033, The Great Reset. So my book is based on the 1933 reset, which is where we saw the common man charged with terrorism for holding gold. Now, that was done legally under the Fifth Amendment of the United States Constitution. So we've seen this before. And in fact, this feels very much, and I was saying to the boys this morning on a podcast that we were doing, that this feels like 1933 when the US dollar had basically lost favour, because you've got to understand currencies are a confidence trade. So if you don't have any confidence to use it, you're going to look for something that has better value. Nothing will teach you value about a currency more than its inability to buy you anything, and the Australian dollar / US dollar are largely worthless. The commercial banks, together with the central banks and largely governments and so on, work in a kind of like a trilateral agreement to keep pretty much the debt system rolling along. And then along come these boys with a stupid idea that we could make people wealthy. No wonder your commercial banks don't like you. But the other problem you've got is not historic so much, but it's futuristic. It's where are the markets going? Now, my new book, cheap plug, 2033, The Great Reset, is about where the markets are going. And central bank digital currencies are sitting right off the starboard bow. And the US dollar is cooked. There is, in my opinion, and I don't think I'm going to get a lot of argument out of these boys, but I believe this dollar is done. We are watching crazy moves like strategic Bitcoin reserves popping up, gold reserves disappearing. Nobody knows where the gold reserves are of the United States, including the US Treasury. And we've got now a strategic Bitcoin reserve, which we never dreamed would happen. Now, no one who out there is talking about a strategic Bitcoin reserve. Why did they create a reserve? So the question is, where is the world at? And I won't bang on about it too much because this is a very passionate topic of mine of where we are headed. Sure. But this is not only historic, but the problem you've got is debt. It is because the entire system is predicated and built on you being in debt, which Sam has referred to. In fact, Sam has now learnt that, yes, you can become wealthy in this country, but you also must be in debt in order for them to want to trade with you. Otherwise, they don't want to know you. So I'll stop there because I'll let someone else have a go, but very passionate about where this all goes. And again, I have written about it in my new book, which is extensive, but it's got a happy ending, I should say, gentlemen. And we all love happy endings.
Settle down, mate. Settle down. There's kids watching, all right? So, now, hang on. So, Tim, I'm not going to let you go just yet. Is this a classic case of them basically killing the golden goose, where the taxpayers got all this... Like, why would they do that? Why would they actually, kill the businesses that are actually creating the wealth that Australia enjoys, that the ingenuity, the entrepreneurialism, that because taxation, in my opinion, is not something the government doesn't need to tax the common man. The government can get its funds from a central bank. You don't need to tax the common man. That a taxation, in my opinion, is an oppressive system, and it's a control grid. Australia has what, 156? How many taxes have we got?
Yeah,
Sam?
about 156 different taxes.
So this is ridiculous, and there's more coming. You don't need to tax the people of the land. Also, by the way, we're a commodities nation. Unlike the Middle East, they tend to tax their commodities, but we tend to tax the common man. So this is an oppressive regime. It is, as I said, it is historic, and of course, what it does is it completely crushes. Now, I want to answer your question in a different way, sure, Joel, because there is something else. And again, this is in my book, 2033, The Great Reset, coming out October. The WEF, the World Economic Forum, is heavily funded by the central bank system to come up with corporate solutions to a problem which the world doesn't have. So they create the problems and give you the response, which is largely handed down through the United Nations. But my point here is where this is going is the World Economic Forum came up with an idea under Klaus Schwab when he was on the board, and he said that what we need to do is we need to get rid of all humans. I love this one. It's fantastic. Right. Under something called transhumanism, and anybody can read about it. There's people that say, well, this is just crazy talk. Unless, of course, you go and read straight from the World Economic Forum's own Fourth Industrial Revolution, which starts with the words, this is a transhumanist agenda. We are getting rid of anything that's a competitor to our agenda. Mm. Now, they sold that to the UN, who bought it and said, this is a great idea. Now it's being disseminated through the commercial banks, it's been disseminated through local governments, and it's been disseminated through massive increases in taxation and capital rotation of traditional assets. So you haven't got a copy there, have you, Joel? Is that
no, this is Reset Australia. It's the Australian edition.
It's is that Ross Garno? Is it? It's okay. So,
yeah.
So Ross Garno,
you're a fan. No. This one's signed. So
well, again, judgment's reserved. But
this is Reset, restoring Australia after the pandemic recession.
Yeah. So look, again, in order to understand what is going on, you just need to look at the 10,000-foot view, and that is what happened historically. I'm now on my third book on this subject. My first book was basically telling people to get wealthy, which is what Sam and Bish do. My second book was telling you which assets we lost our silver positions in favour of a fiat currency, and now we're losing our fiat currency in favour of a digital currency.
Yeah.
And the problem with the new central bank digital currency is it has no value. And the United States, we've just seen recently, pegging stable coins to US dollars in an attempt to save whatever. They're desperately clinging on to things. And in the new system, just to share a little bit more about the new central bank system, there are three types of central bank digital currencies. One of them is a direct claim on the central bank. That has no value. The second one is a claim on a combination. It's called intermediated. It's a central bank digital currency that will be functioning between the commercial banks and the central bank. And the final one is an interesting one called synthetic. And the synthetic CBDC is basically going to function via corporations. And the problem with corporations such as Ripple controlling a currency stream is that it puts the central banks in a precarious position. And the problem for the planet right now is they don't have the legislative frameworks in place in order for this to happen, but it's happening, and it's happening incredibly fast, and it's happening because of currencies like Bitcoin, which the governments of the world seem to try to ignore for quite a long time. The central banks didn't adequately tool up, and now they are running like rats on a sinking ship, trying to come up with a solution. And their first solution is to do what they did in 33, and that is to stop people withdrawing funds from the commercial banks for the purposes of becoming wealthy. And that is what's happening. And we've just seen massive rotations out of superannuation industry super funds. I think 58%. We saw recently this figure that people are starting to diversify into wealth assets. The commercial banks are well aware of this. The Federal Deposit Insurance Corporation in the United States has been monitoring bank deposits now for quite some time, and bank deposits are way down at record low numbers, which means people are not putting their cash in the commercial banks because of confidence. This is a loss of confidence. It happened in 33, and Roosevelt was in office 36 hours before he shut the banks down. And 4,000 of the 10,000 banks never reopened, and people lost everything. That was the end of it. And you have no recourse if you're in that system.
Yeah.
So that's my short answer to that question.
No, this is why you guys are here. It's because you're a fire hose of information. This is your area, and people, frankly, they're just trying to survive right now. They don't have time to look at better ways that what their super could be doing right now. So this is why you're here. You mentioned synthetic digital currencies. Is that the one where basically the World Economic Forum, they want to program the currency so that you basically can only buy a certain amount of, they know how much meat you buy every year. They know how much you travel every year. Is that the programmable one?
So the World Economic Forum is only the figurehead. So just to explain to people that are listening, there is 1,000 corporations, including Brad Garlinghouse from Ripple, who sits on the board of the World Economic Forum. There are 1,000 corporate members. Now, Brad Garlinghouse has an incredibly powerful position because he's not only head of an incredibly powerful corporation that has amazing assets such as XRP, but he's also a threat and an asset, excuse the pun, to the central banks. So really, this central bank digital currency you're talking about is fully programmable. It is geo-fenced, geo-timed. It has a negative interest rate applied, and it expires. So if you don't spend your currency, you will lose it. They will give you a time frame, and you will have literally a timer on your currency, and you must spend it. And the reason for that, and people probably thinking, well, why is that a big deal? It's because if you've got to spend continually the dollars that you have in your commercial bank account, then you are under enormous pressure just to offload this currency. You cannot hold it. Transitioning to wealth assets, by the way, on the other side of this monetary reset from a CBDC, I mean, I don't know what the boys think of this, but in a programmable environment, I don't think it's going to be that possible. They could program your currency so that it could never be converted to any other type of media, right. And that means you're trapped. You're trapped in debt. And we're watching the European Central Bank. So if your listeners want to know where this goes, October 2025, the European Central Bank and the European Commission have formulated a strategy to start bringing in their new phase of the CBDC. This is why you're seeing in Australia these commercial banks running scared, because there is the high chance that that people are going to be caught off guard here. That they don't want you out of the system. They're trying to keep as many people, and I'll get their opinion on this, but the off-ramps are being shut down, and they want as many people in this system as possible. Because if you become wealthy, my view is if you are holding gold, silver, Bitcoin, these kinds of non-traditional assets on a market that's rotated, you could become immeasurably wealthy. And I'll say this, the amount of wealth that I'm talking about is unimaginable. The reason is because of the power of something like Bitcoin and the untapped power of gold. Gold isn't doing much at the moment. If you have a look at the spot markets, it's trading in something called the range. We've been watching it for a while. It's skyrocketed. I mean, gold has up about
25% in the last 7 months, up 40% last year. So it is trucking very strongly here. But like Tim says, it's been at around that $5,100, $200 per ounce Aussie level for the last few months. Silver and platinum have been the really big runners over the last few months, not gold. Now, I think gold will run again soon. But yeah, you're absolutely right, Timmy. It's been trading in a range for a little while.
But my point is, it's as a reserve asset or as an asset, a wealth asset, once the market flips over to zero value in CBDC, once it flicks there, gold doesn't have a price anymore. That gold is just a value system. It means that there is no way to calculate the value of gold. In other words, you are immeasurably wealthy by design, but by the fact that you're simply holding, or by default, but by the fact that you're holding these assets. Bitcoin, and again, I'm not going to talk about it because it's in my new book, 2033, The Great Reset. It's in my new book. There's a chapter called Hyperbitcoinization, and I'd love to hear Bish's view on this. And this is a word that no one knows. Like, none of the people listening to this know this word, hyperbitcoinization, but I wrote a chapter on it because it has something extraordinary. Without giving it to, I will say, Bish, if you do talk about hyperbitcoinization, what I don't want to do is give away this chapter in the book. It's too valuable to give away. People need to go and get the book to understand what Bitcoin and why Bitcoin has been put into the reserves of the US Treasury. They are looking to increase their reserves to 1 million Bitcoin by 2030, which is to coincide with the UN's Agenda 2030. I think we have, honestly, if we have 3 to 5 years of the currency, the fiat currency left, I think that'd be an exaggeration. I think this currency will be well and truly gone by the year 2030. I don't think central banks will be trading on traditional currencies because the ECB and the Bank of England are moving in October. We already know that. And the European Commission is, under Ursula von der Leyen, is looking to mobilise people's funds. 10 trillion euro private euro funds are looking at being mobilised. What that means is a very high chance that the European Commission, which is the administrative arm of the European Union, are going to literally take your funds, just like Roosevelt did in 1933, March 6. They shut the commercial banks down and they said, that's the end of it. It's too risky for us to leave the commercial banks open anymore. The European Central Bank is highly likely, that by their own admission, not the European Central Bank, the European Commission, of mobilising consumer funds. That means they're going to take your pension funds and pretty much all your deposits are gone. Unused deposits was their exact words. Well, what else is a deposit if it's unused? Yeah. We've had this conversation before. And this is the backstory. This is what is going on.
Yeah, yeah. Bisher, what's your take?
There's a lot to...
there is a notepad underneath the table if you run out of next time.
Need several notepads.
Yeah.
Look, that's what I love working about with these boys. Like Sam and Tim are just a font of knowledge, and I'm so glad that I get to work with them and, appreciate the platform once again to be able to discuss these key ideas.
Well, you guys called me and you were like, guys, we're in a job, we've got to book something, we're in Sydney, things are happening, banking, debanked and all that. Yeah, what are your thoughts?
Look, I think that Tim and Sam are on the money, right? We're witnessing a incredible shift in value at the moment. We're recognizing an incredible transition, right, within the financial system, within the banking system. The banking system hasn't changed all that much over the last 100 years, right? There's been some upgrades, there's been, some online banking portals have come online, but ultimately it's the same messaging system that occurred in the 80s is now still being used today to transfer and receive value internationally. That is old technology, very outdated, very slow, very cumbersome. And the problem isn't just the speed, is that it is gate kept. and people are told what they can do with their funds, how they can spend it, when they can spend it, where they can spend it, why they can spend it. That's not your funds anymore, right? And that's the biggest solution that we provide. Is Bitcoin provides three things. One, it's an open and permissionless network that allows us to transact and, send and receive value anywhere in the world without having to go through a gatekeeper or ask for permission. Super important. Number two, it's a store of value because of its limited supply of 21 million Bitcoins. If they keep printing currency at a rapid rate, which they do, there'll be more currency in circulation bidding on this same scarce digital asset. Number two. Number three, it's a means of exchange. It can either be converted into any fiat currency on the planet because it's globally recognized, or it can be traded in kind for other goods and services. So that's really what's going to happen, and what Tim's touching on with regards to hyper-Bitcoinization is Bitcoin being used as ubiquitous. It becomes as ubiquitous as, say, the smartphone. It becomes as ubiquitous as email. Right? So if somebody says, send me a mail, right, they're not even thinking of you sitting down, writing a letter, licking a postal envelope, putting it down, writing their address, sending it in. If they say, send me mail, right, you're anticipating an email to be received, right? And that's really the direction of where we're going. And when somebody says, oh, look, I'm going to be, I'll be on my way, I'll be there in 15 minutes, nobody pictures you getting on a horse and making your way trotting down Market Street to get to the next destination. They anticipate you're going to be in a car or in an Uber or something, right? Same thing with Bitcoin. Bitcoin in the next 10 to 15 years, 20 years, when they say, we go out for lunch, all of us afterwards, and then when we go to square away the bill, we pay in Bitcoin, right? That's hyper-Bitcoinization, where it just becomes as ubiquitous and as everywhere as the iPhone, the phone, car, the car, that and the email. Right? That's the direction we're heading in. And right now, only 7% of the global population has ever used Bitcoin as a means of exchange or as a transaction in a transaction capacity. Probably a little bit more have used it as an investment within their investment portfolio. But we are so close to hitting escape velocity. Right. And that's why there are so many problems with the banks and the legacy financial system, is they feel the walls closing in, and then there's just Sammy and Bisher on the other side just squeezing the walls in. But we're going to get ahead. We've got the better asset class, and the great thing about our assets is it makes people wealthy instead of putting them into debt. So if you want to get ahead in the legacy financial system, what are you told to do? Go out and get leverage. What do you do with that leverage? You buy a house. Now you're sitting in what is known as a mortgage, which is in French a death pledge, right?
Is that right?
Yeah. Mort is dead and engage is pledge. Right? So that's what that's the.
You're a cultured guy,
I am. I come from a part of the world, a Lebanese Syrian guy, so I understand the French very well.
Really.
But really, what it comes down to is you're committing to yourself to 30 years of debt, and the only way that you can get ahead is that you have to then, if you build up a profitable or equitable position in your property, is you leverage up against that property and get more debt and get another property. So the problem with the commercial banks is they create, get this is insanity statistics, right? 97% of currency is created at a commercial bank level. And I'll explain how. It's through the use of fractional reserve banking, right? You put $100,000 deposit into the bank, that is no longer your funds. You are considered, and get this, an unsecured creditor. Who gets paid before you in the case of a bank becoming insolvent? First of all, shareholders, people who hold equity within the bank. Secondly, secured debt, people who are holding the bank's debt, right? Otherwise known as bank bonds, right? And then number three, it's yourself. You're the last line to get paid out in a system, in a case where the bank goes insolvent. Here's where it gets really crazy, is that when you deposit $100,000, not only do you become an unsecured creditor, but they can lend out that same deposit 10 times over and create $1 million of the worthless Pacific peso out of thin air. Thin air, boom, just like that. And now that's what you now have to pay, that $1 million that was just created out of thin air. You have to pay an interest rate on that to repay the bank for the privilege of lending you currency that they just created out of thin air. When I turn around and say, guys, 10 years ago, it took 3,400 Bitcoins to buy you the average Australian home in Melbourne or Sydney. Today, it's 5. In the next 5 to 8 years, it'll be 1. 10, 20 years from there, 0.1.
Yeah.
So it's
well, look, let's
tough position to put the banks in.
I do want to pivot it slightly, this discussion.
Absolutely.
And by the way, I do have a fact check just quickly. Some of you heard, how many taxes did you say we have in Australia?
156, is
156. Well, we know we definitely have 125. The IPA did a study on this. This just came out in March. So there's 125 different taxes levied across 3 tiers of government in Australia. So I think that's too many. I think more than 50 is too many, to be honest, guys. So
That's 121 too many.
121 too. That's it. That's
all
it.
forms of taxation is theft.
Hopefully that's it. I'm into that. There should really only be back in when America was really founded. They had tariffs.
Yep.
And that was it, I think. I think they didn't have personal income tax.
Well, they were using first of all, they were using gold was their fundamental driver of their monetary system. Since then, we've got fiat, which is different, and gold's a non-yielding asset. So it was very hard. So anyway, back over to you.
Back over to it. So when it comes to people that are tuning into this podcast and they get this absolute fire hose from Tim saying European Union, the WEF, the this, the that. Mate, I totally agree, and I'm reading the same stuff, and you taught me some stuff. My audience, they would have also followed you right with it, but there's a lot of people out there that are like, mate, I'm not even sure if I want to put 5% of my net worth into Bitcoin or into gold. They're not there yet. And it's like, well, what is the gateway drug per se with regards to how, if you're a very risk-averse person, you love land, you love houses, again, I'm a property guy, Sam, I've seen you put your hand up. What would you say to these people?
I love this one. So I remember this is a personal story. When I was first looking into gold back in 2018, I'd done a bunch of research. I thought they've printed a lot of currency since 2008. Inflation's going to get pretty bad here, guys. Time to buy an inflation hedge asset and make a lot of money. I called my dad up. I said, "Hey, Dad, I've done all this research. I think you should buy a lot of gold. We're talking millions of dollars, Dad." And he says to me, "Son, I appreciate the tip, but I just can't afford to lose money right now." And back then, gold was $1,200 an ounce, and today it's $3,300. So for everybody out there who's risk averse and says, "Oh, look, money's just safer in the bank than in this gold stuff," I say that you don't understand the system, you don't understand fiat currency, you don't understand banking. Gold is safer than money in the bank. There's a few websites that I really want to push people to have a look at. First of all is the USDebtClock.org. You need to have a 1,000-foot view here of the situation, guys.
Let's bring that up if we can.
Yeah. The currency is dead, guys. It's dead. And the second one that I think really hits home for people because it's super infographic is demonocracy.info. So that's another great website that I'd also like to pull up. Once you have a look at those two websites, you get an understanding of where things are at. Do a little bit more research into banking, fractional reserve lending, like what Bish is talking about here, and also have a look at bank bail-ins. The legislation's been written. It's written for a reason. Money in the bank, I won't even call it that, fiat currency in the bank is horrible. What are you going to get, 4%? 4%? Gold did 10 times that last year. It's horrible. Don't do it.
Yeah, this is the debt clock, guys, if you haven't seen it. Currently, this is the big one you want to look at, $37 trillion. Trillion is really hard to get your head around. I think it's at least 200,000 for every man, woman, and child in the US, something like that. I don't do quick maths.
Yeah.
Look at that budget deficit number. So that's $2 trillion a year currently. They're looking to double that to $4 trillion a year. So every year, that budget deficit or that national debt will increase by $4 trillion. So it goes from 37 to 41 trillion next year, 41 to 45 trillion in the year 2027, 45 to 49 trillion by the year 2028. You guys do not understand the debt tsunami that is coming.
And you know what's scary about this? I've never actually picked up on this. But I've got you guys in the studio. So I was wrong. It's 108,000 debt per citizen, but it's 323,000 per taxpayer.
That's a key difference, guys.
Yeah.
That's a key.
So what? So what? Only 33% of the eligible taxpayers are actually paying tax? Like what? Like what's that about?
This is a really great conversation.
This is about to go nuclear.
So guys, if you look at who pays the taxes in this country, it's the top 10%. I say that as someone that's paying a lot of tax. It's the top 10%, particularly when you talk about a net tax paying basis, how much you pay versus how much you receive. It's
Yeah.
the top 10%, guys.
100%. Because the stat in this country, the rock solid stat, is over half the country takes out more of the tax than they put into the tax.
Yep. Let's talk about this country, right? It's beautiful.
This is him on water, guys. This is water today. You know, like, get shit, shit, fang it.
Okay.
Yeah.
Look, what it really boils down to is this. This is crazy. My eyes watered when I read this. Almost more than half of the Australian Electoral Commission voter base, registered voters in this country, are reliant on the government for their income. What? Are you serious? Are you directly employed through the government or through a subsidy or through some sort of like NDIS program or something related, or subcontracting through something? Victoria's got the big build going on. How crazy is that? Half are reliant on the government. Now people are going, yeah, we're going to want change. We want a revolution, mate. We're going to change the system, buddy. Yeah, mate. Half the voter base is reliant on the government for a paycheck. You know the old adage, don't bite the hand that feeds you? Come on, man. How are we going to get a genuine... Now, I'm talking straight to the audience here, right? For all you freedom fighters, for all you lovers of democracy and, you know, my rights and all that, I'm with you 100%. How are you going to affect change in a system where more than half of this country who are registered to vote and have a say in this democracy, if you will, are reliant on the government for their income, right? I am a proud business owner. I'm a proud entrepreneur, right? I pay corporate tax. I pay my personal income tax. I pay capital gains tax. I pay taxes all through my life, right? And completely audited all the way through, right? I got my FY25 notice of assessment all done, right? This is super important for me, that we do not have entrepreneurship in this country. We do not have a love of business in this country. We do not have a supportive small business environment. Mum and dad businesses have been completely ripped out of Main Street, right? This is not good, guys. You go down to, we were walking up and down Sydney today, going to meetings and stuff, doing what we're doing. All of the shops are just big multinational conglomerates and brands, right? Where's the small retailer? Where's the small coffee shop owner? Yeah, there's a few here and there, but we do not support entrepreneurship in this country. We do not support business. Why? The government wants more people eating out of its hand, because the more people that are reliant on you to be able to provide and support for their family and feed their children, the less likely they are to rise up and have a revolution that I keep hearing about. It's not going to happen, guys, because we are too reliant on the teat of the government, and I'm sick of it. I'm absolutely sick of it.
Yeah, and that's what they want. Rather than have 3,000 small businesses, they want one Coles.
Yep.
Because that, at the end of the day, that's one chairman I have to call up and say, hey, shut this down.
Yep.
I think we see that during the COVID period. I know you guys are sick of me talking about it, but they show their hands when they do this. The devil, he shows you his hands when he gets really thinks he's going to win the game. It's like chess. What he does is he's basically like, all right, we've got this. Now we can enforce all of these laws. Specifically, let's make the rules for lockdown apply to these businesses, but not those businesses. So the big businesses, they were like, yep, you can go to Bunnings, you can do this, this, and that, but you couldn't go to like a Mitre 10 and go to one of those corner stores that were franchise owners. And that's the problem that we've got with this, that if you're in the boys club, like these guys are not in the boys club, you know, Bisher is not in the boys club, Sam and Bisher, they're not in the boys club. And the thing with that is they can't just call up their mates at the big banks that they grew up with or went to the same school with and say, hey, what's the inside with this? Can you break your client privilege with this by telling me what's going on with this? Do you reckon you can intervene? It's a selective enforcement of the law on these guys. That's what's going on. And look, don't get me wrong, these guys are pretty eccentric, all right? But it's always the eccentric ones they go after first. It's always the crazy eyebrowed guys that they go after first. and then they then they go after everyone else, and that's the problem. If you don't speak up for these guys, if you don't actually support these guys, if we don't build this parallel economy, that's the problem that I see.
Can I just add, you were talking about the club. You may not be in the club, but you can have the same assets that the guys in the club have. And we have this fabulous saying that we came up with just the other day, actually, become wealthier than those who make the rules. If you can do that, then you will be essentially okay. But the problem is the rules are designed to prevent you doing that. And they, as you said, you may not be in the club, but you have access to the same wealth and the same ability to make that wealth. The problem for the common man, I just want to jump in here. There are three problems. We have a three-tier society. We have a lower class, a middle class, and that's an extensive class. A lot of people say to me, well, what's your definition of middle class? It's basically everybody. There's the lower class, the middle class, and the wealthy class. And there's a difference between all three. And this is fundamentally the problem with the countries in the West. I mean, the boys were talking about other countries like the Middle East and some of these other countries that understand wealth and capitalism. But in Australia, we're a westernized kind of Commonwealth-style nation. Commonwealth of who? What Commonwealth exactly? And there are three classes that I think are really important to look at. The lower class is essentially a class that is clinging on to the edge of survival every day, paying bills, trying to work for an hourly rate, generally lower hourly rates. You cannot get ahead there. You're just going to tread water. The middle classes are all about comfort. They're looking to try to achieve some kind of comfort somewhere. I want to have a holiday. I want to have a house. I want to have this idea of the great Australian dream, you know, the white picket fence with the kids in the backyard while grandparents knit sweaters on a Sunday afternoon while Nana bakes scones, and sounds nice. And then you've got the wealthy class who are obsessed with dynastic and generational wealth. In other words, which assets here are going to be better for the future of my family. This is the difference between the classes, and the middle class is the one that is in the crosshairs here. That's the biggest of the classes. They don't understand. They don't understand wealth. They understand real estate. Australia's abysmal because that's all we get. And the boys and I, look, myself, you know what it's like out on socials. You get skewered. If I was to say something like, I have a fluffy cat, I would be skewered. If I said something like the sun comes up and it's warm, I would be skewered. Yeah. It doesn't matter what you say on socials. There's going to be a whole lot of people that hate you for it. And one thing I say a lot on socials, and these boys have been on socials with me and backed me up on this, is Australia's obsession with real estate will be the death of the middle class. And I'll let the boys talk about that. But this is a major driver of exactly what, going back to the start, when Sam said, I have to get into debt in order to have my position with the commercial bank. Yeah. He's done something unthinkable. This guy has done something ridiculous. They've moved into wealth assets. You're not meant to do that. The club can do that. You're not allowed to do that.
No, they're insane.
They actually have a list. They say, listen, is Sam Laurie on the club? Is Bisher Sam? No. Is the guy in the hat in the club? No. Okay, well, they're not allowed to attempt this.
Yeah.
Because there is also the inherent danger that if they get it, and they do become wealthy, which they have, then somebody else might look at them and go, hang on a minute, so you're telling me that I could become wealthy too. So now you've got 3 people, then you've got 10, then you've got a whole, then this becomes a revolution. And the poor little boys club, who's only in that club because they are able to control things, their positions are suddenly tenuous.
Yeah.
That's why I say, if you want to become wealthier, that's why we say, become wealthier than those who make the rules. Then you're above the rules.
Absolutely. Where do you want to take it from here, gents? Because there's so much we could go into. Do you have any other thoughts on that?
Was there any other topics you wanted to discuss?
Honestly, we need another hour and a half, 2 hours. Like, seriously,
are we out of time already?
No. We've got another 15 at least.
I have an idea here, guys. So I did mention 2 websites earlier. We saw one, which is the Debt Clock, and that was great. And please, guys, spend a bit of time on there. It's incredible. The second website, please pull it up, Demonocracy, so like democracy, but demonocracy.info. Please bring that up. That's infographics about how much currency gets printed. So again, for those who feel safe sat in fiat currency in a bank account, please let us just lay out reality for you. If you look at how much currency that has been printed since 2020, since 2008, and you look at how much debt there is out there, things start to fall into place. The numbers are hard to conceptualize, but demonocracy.info does a great way of doing it. So I'd like to specifically on that website go through the infographics around how much money has been printed since 2020.
This is the website. Yep. How much since 2020? Yep.
So this really helps people put it into perspective. So that's $100 US. That's 10 grand. If we keep scrolling down, what's that? That's $100 million in cash. Sat on your little couch of cash. Isn't that really cool? Keep scrolling.
Is that Michelle Obama there?
Keep scrolling.
Yeah, that's
keep
it.
scrolling.
That's him.
So that's $1 billion in cash, and then you keep scrolling, and then you see that $27 billion. That's how much the Federal Reserve printed every day in 2020.
Oh.
No days off.
Billion.
So guys, when we were locked at home, when we were told 2 weeks to flatten the curve, when we were watching Netflix and Tiger King, who remembers Tiger King? What an epic show that was. When we were locked inside of our homes, these guys were out busy printing. They were not at home. They were not working from home. They were manning that printer.
Yep.
So guys, you need to understand the level of currency creation going on for you to understand why gold went up 40% last year and why it's up 25% this year, despite averaging 9% a year since the year 2000. Things are going on now.
Yeah.
Things are changing. The paradigm is shifted. Make the move.
And you know, it's crazy. We had
How can you look at that and go, you know what's a good investment? Cash.
I just prefer.
It's so cheap. Yeah.
It's so cheap. It's just pumped out into the thin air, and it's so rampant, right?
Yeah.
People complain about the cost of living crisis in this country. It's so hard to afford bread and milk these days. I get it, guys. I get it. I really do. I'm not trying to have a go at the everyday Australian who's struggling. I understand how painful it is. What it comes down to, though, is you're blaming the wrong, and you're finding the wrong solution. You're looking at Coles and Woolies and going, it's a duopoly, break up the duopoly. Yeah, that's part of it. But I'm not going to go after the corporations here. What is actually driving the cost of goods and services in this country and around the world to go parabolic and go on this exponential curve is rampant currency printing.
Yeah.
You stop that, but they can't afford to stop it because they're so massively in debt. And that's why it's like you have to get these inflation hedge assets. You got to get your Bitcoin. You got to get your gold and silver because it's liquid and it's on the only assets that are available on demand, regardless of whatever debt system we're in.
Yep. I'd love to touch on something that Bisher said there as well about where to lay the blame. So this is something, again, you know, the anti-business sentiment in this country. I'm not defending Coles and Woolies here, guys. I'm not defending their business practices. But in general, right, when we look at the price of food going up, and there's currency being printed out of thin air at a massive rate. Is it the food going up? Is it that? Is it the greedy farmers? Is that it? And here's the thing as well. If the inflation we've seen since 2020 is because of corporate greed, then you're also trying to tell me that when we had low inflation before 2020, there was no corporate greed. Is that the case?
No.
You know. Also on the US debt clock, which direction does it go?
North.
Right. So when you think about it, then where is all the taxpayers' dollars? How is that, when have you ever, and this is a fair question on the US debt clock, seen that number start to go downwards as a result of all the tax collected by the government?
Get this, they are paying in the US debt clock $1 trillion a year just in interest expense alone. $1 trillion a year.
Yeah.
Look at how much they collect in tax revenues. That soon their interest expense will eclipse how much they collect in tax revenues.
Yeah.
And that's a death spiral, ladies and gentlemen. That is absolute economic, financial suicide. You're not coming back from that at any point in time. And this is why it's mission critical. You at home, if you've got $10 in your bank account, this benefits you. You got $100, $1,000, $10,000, $100,000, $1 million. It doesn't matter where you sit within this country. You must get yourself out of the commercial banks. No wonder they don't like us, right?
Yeah. What did we say?
What did I say?
Why am I getting debanked?
Was it something I said?
Might need to run that backup channel, Joel.
Yeah. Well, I've just lost another one. Yeah.
So the Roaring '20s. I know I go back through history, but it's important because that was a negative velocity curve. So what happened in the Roaring '20s is everybody became the credit is what really drove the Roaring '20s. People had opulence because they had access to credit. It was fabulous because the commercial banks, as you said, they were fractional. They could lend out all this currency. It had no value. The Federal Reserve was happy in the US because they could pump and pump and pump. And of course, the only problem with the consumer borrowing funds is at some stage they have to pay it back, which they couldn't do. So what happened was the currency went into something called negative velocity. It's a curve that no one ever talks about. And the US dollar is in a negative velocity curve. And what happens is currency is printed into extinction every time they add another US dollar. And that graphic that you showed, Sammy, was epic. But a negative velocity curve, what happens is the currency, every time they add a dollar to the currency stream, it devalues the entire pool. And the more you add to the pool, the quicker it devalues. So what the government has to do is print more currency to make up for the shortfall, to make it look like the currency is actually moving through the system. This is what led to the collapse of the crash of Wall Street in the October of 29. Confidence was just totally lost, and the market started to fail. So what I'm saying is, these boys are correct, and that is that if you continue to print this stuff, it will cause the value, the overall pool value, to depreciate to the point where we hit inflation, but worse than that. And this is what people need to understand. It's not inflation that's your problem, it's hyperinflation. Mm-hmm. Hyperinflation is a total nightmare. Sammy, I'm taking over Joel's podcast here, but what is hyperinflation?
So hyperinflation, I love this, guys, and particularly talking about that US debt clock, I'd argue we're past the point of no return. Guys, it's done. It's done. The system's done. There's no coming back. We're too deep in debt. There's no way to pay it off. We're getting deeper in debt every year. Trump's big, beautiful bill is going to go take the deficit from 2 to 4 trillion. So the debt's going to grow even faster. There's no way to pay it back. If we were to bring that deficit back and run a surplus, the US economy would collapse. It would absolutely collapse. The whole thing's propped up by government money. Same thing in Australia. You look at the growth in public sector jobs versus private sector. Private sector dropping off a cliff. Public sector running up same said cliff. Guys, it's done. We're past the point of no return. And what I mean by past the point of no return is that we're going into hyperinflation. Now, hyperinflation, you can read books about it. We've got a great book that we sell, When Money Dies, talks about the German hyperinflation of 1923, Weimar Germany. Please look at Weimar Germany. It is a fascinating piece of history. Hyperinflation is something that people in the West have no real idea about it because it hasn't happened to us for over 100 years. And that's the problem. That's the problem right there, is we're complacent. We're past the point of no return. We're going into hyperinflation. We're all complacent. Now, what is hyperinflation? Well, hyperinflation, if you look at the textbook definition, it's something like when prices increase by 30% a month or something like that. The real world hyperinflation is, you look back at 1923, Weimar Germany, prices would double more than once a day. More than once a day. Yeah. You go to the coffee shop, you order your coffee, it comes, you drink it. By the time you pay the bill, the price has already changed. That is hyperinflation. Yeah. You read this book, people, they'd get paid for the month, they'd go out and buy everything there and then before the afternoon's over because they know if they did it the next day, prices are double. Yeah. Like, that is hyperinflation. And preparing people for that is gold, silver, Bitcoin, right? Throw some platinum, throw some altcoins in there as well. But it's things that can't be printed that do very well during periods of hyperinflation. I learned about hyperinflation not from my economics teacher, but from my history teacher. And my history teacher told me that the people in hyperinflation that held gold and silver, laughing all the way to the bank. Everybody else, dead in the water, screwed, poverty. So, and again, we're past the point of hyperinflation. We're going into it. There's no way out. We can't reduce the deficit. We can't run a surplus again. Why? Well, because the first rule of politics is to ignore the first rule of economics. And the first rule of economics is scarcity. So when you have a certain amount of resources and everybody wants them and everybody wants free handouts, the politicians, they go out there, they start promising things. We'll give you this, we'll give you that. They're Oprah Winfrey. And they don't worry about how to pay for it. And why should they? It's not their job to worry about that. It's their job to worry about getting re-elected. It's the voters' job to worry about how to pay for it, and nobody cares. No one cares.
And this is also really important on this topic of big government, is that without rampant currency printing and without this, death loop of debt that we're constantly in, the government will continuously get bigger and bigger and bigger as government budget deficits continue to increase and increase and increase. We've got a half a $1 trillion budget deficit in this country, right? I love talking about the US because that's
$500 billion.
$500 billion in debt.
Pretty sure it's a trillion.
We're in a trillion?
State and federal, yeah.
State and federal. Okay, yeah. So we're across the nation, we're $1 trillion in debt, right? mean, that's rampant deficit, but it's only ever going to continue to get bigger because the government will continue to get bigger. There is no way that we are going to get back to a free market capitalist economy, right? That's a really big problem. People think that because they're able to, apply for a permit or a license and they can start trading in some capacity for whatever they want to do, a coffee shop, whatever, that we live in a capitalist country. We don't, right? We live in a centrally planned economy because even the currency that is printed is controlled by the hands of very few people who centrally plan the cost of money or the issuance of currency, I should say. That's a huge problem. So we've got this really, if we want change, if we want genuine change in Australia, we need to move away from fiat currency and get onto a gold, silver, and Bitcoin standard. Number one, we have to. There's no other way. We have to then downsize the government, reduce tax, reduce the amount of taxes, ideally to zero, move towards a voluntary taxation system. If you had a public Bitcoin wallet address for the Australian government and you see how many Bitcoin they have, and they say, well, we want to do this big infrastructure spend and we want to be able to do all these new hospitals or whatever it is, right? Good initiatives that the public would want to see, then it's up to the public to deposit that Bitcoin into that public wallet address in order to raise the capital in order to get the public goods, services, and infrastructure that we're after. If we don't raise enough and we don't spend it judiciously, right? Because Bitcoin is a scarce asset. You can't just print more Bitcoin out of thin air if you have this budget, you have a project blowout. Yeah. You need to have Bitcoin, gold, and silver as the units of accounts and the means of exchange in order for us to have a far better economy and a far better class of citizenry who are better off in general.
Yep. Gents, just a couple of things to point out. Weimar, Germany, this is what it looked like in terms of kids bundling up cash and basically playing with it as if it's a toy. Also, people obviously with wheelbarrows going and buying a loaf of bread with just a ton of cash. I don't think that's Weimar, Germany, but you get the idea. This has happened in many Asian countries, South American countries where this sort of thing happens. Also, the US debt clock, I just noticed, has a Doge clock, how much they're saving, thanks to, obviously, it's a bit late, but they're working on it. They're getting up to almost $600 million, which is hard to conceptualize.
Can I give you an idea of what Doge is? The US budget, current national debt, it's like shitting your pants, and then Doge clock is like changing your shirt afterwards, right? So
it barely takes the top off.
It doesn't. It's done nothing. You're still sitting in shit. Like that's like I'm not trying to be crass, but the idea that they're going to cut their way out of this debt is absolutely laughable. In fact, they have spent more under the first 7 months, 8 months under Trump's administration in handouts and government benefits than under Biden's administration. Not because Trump is increasing the amount of claims or anything like that, but what he's doing is he's just a puppet, a figurehead of a much bigger system that requires constant debt to grow.
Absolutely.
Yeah. Something I'd like to touch on as well. A lot of Australians, I think, are quite what's the word I'm looking for here? Unaware of how much debt we're in. So, earlier we talked about federal and state debt hitting $1 trillion. We're a bunch of Victorians here. We're from Melbourne. We flew up on the plane yesterday.
They let us out.
So to give you an idea, guys, they let us out of communist Victoria. What a mistake.
They can probably tell, Sammy, we look a little bit more gnarled and look a little bit more browbeaten.
The asylums have escaped. Go on. How much debt have you guys got?
So, guys, everybody knows that California, right? We're going to compare it to California for a second. Everyone knows that California's in a bit of debt and their state government's a bit crazy. Gavin Newsom, all of that. They like to spend money on dumb stuff and there's loads of corruption and all of that. So if you look at Victorian state debt and you compare it to California state debt, right, guys, this is how bad it is. So in California, they have a gross government debt of $166 billion, which works out to roughly $4,200 per person. That's not bad. I mean, it's not good, but it's not bad. In Victoria, it's $186 billion, so it's more than California, which works out to $27,000 per person.
Boom.
Guys.
Houston, I think across the nation,
we got a problem.
I think across the nation, it's something between $30,000 and $35,000 each person.
Yeah, and that's state debt, guys. And you got federal debt, and then you got the council level, 3 levels of government.
Yeah.
Guys, it is so out of control. It is so absolutely out of control. And what we offer here is the solution to it. People ask me all the time, Sam, why is gold up so much? What's going on, mate? Come on, have a look.
Yeah, and then that's the thing. There's information for the classes, and then there's information for the masses. And what we're trying to give you guys is an insight to the information of the classes. We're encouraging you to come to a higher calling. I know it's a lot to take on, guys, but if you invest 1% of your time into the future of your family's prosperity, I promise you, you will actually prosper over the next 10 years and actually prosper even more immediately. And what I want to point to is, and I want you to remember this image, on the debt clock, it has debt per citizen, 108,000 in America, and then debt per taxpayer, 323,000. So it's really the taxpayers that are paying this. What I want you to remember is this image. It used to be no one was in the cart, no one was paying taxes, it was just tariffs, it was other countries that were funding the defense of Australia and America and all that. That's changed. It eventually was one person sitting in this cart, 1 in 3 not paying taxes if we pull up this image. Now it's more like one person is funding all the 66% of the country, basically pulling the cart on. Now it's going to get to the point where all those productive people paying taxes, no one's going to be pulling the cart. And that's when you get a terrible, terrible situation. And that is where political ideology gets really crazy, really nuts. I'm here for it. Like, this is my job. But at the end of the day, I did a video the other day. You've got to take care of yourself, your business. You've got to go move your business where you're going to be most profitable. This is not just about moving state. For some people, it makes sense to move country. And it's from that position of strength you can raise your kids, build your business, and then help Australia. But you've got to take care of yourself and your family first. You can't do this. Don't be a pauper where you just sort of go down with the ship. You can still be a patriot by actually moving your business to a place that is actually more profitable. Then you're actually better in a position to help this country. So by no means do I say stop fighting for Australia. Never stop the fight for Australia. Me and my family owe an enormous debt to this country, and we will never forget it, and we will never stop fighting for this country. But don't be stupid. Do not be stupid with your business. Do not put your kids at harm, and do not stand in front of this train that's coming. And that's what this is about. I know it's a lot to take on, and if you're absolutely new to this whole process, consider putting 5%. Consider putting 10% of your disposable income or your net worth. Dip your toe in the water and talk to these guys. I've left their links in the description and their books that are coming up as well. And actually get your head around this and really prioritize it 1% of your time over the next few months before the end of the year, because I want you to prosper. Again, I get nothing for this, guys. I just want to see you prosper. I'm already, this is how this studio was built. It was through Bitcoin. It was through actually holding onto that and double, tripling the value of that Bitcoin. I want you guys to have that because I know that money is an amplifier of character, and you guys are some phenomenal people, and I want to see you prosper. Gentlemen, are there any last 60-second thoughts you want to leave with the audience before we wrap this up?
Look, I'd like to touch on something that you just said there, Joel, about money being an amplifier of character. I could not agree more with that. If you're a prick and you get money, you're going to be a massive prick. And if you're a great guy and you get money, you're going to be an amazing guy. You can help so many people. And, you know, I'd also like to say there's no nobility in poverty. You know, there's no nobility in being harmless and not being able to help anybody. You know, it is your individual duty to go out, to achieve, to feed your family, to live a good life. That's on you, and that's fine. We can help with that. But yeah, I love what you said there, Joel. It's so true. Money is just an amplifier of character.
Amen.
Sorry, I just want to jump in and just add something, and that is my final take on this is wealth gives you the ability to make choices. Think about what happened during COVID, the people that there were people that didn't want to do certain things. So wealth gives you choices. Choices give you freedom, and freedom gives you life. So make good choices. Nice. Over to you, Bish.
Guys, I just want to finish on this one very important message, which is you're not bullish enough. you do not understand the sheer gravity of the debt situation that we're in. I think we've done a good job at being able to give a couple of explanations as to how you can manage and how you can get on the other side of it, because we're not doom and gloom guys. We're actually solutions and ideas guys. That's the main difference. Call my office, 0385941454. You can slow that down if you want to hear it back, or email us at trade@stormrate.com, because we are there to serve you. We are not here to make accessing this market, this wonderful asset class, this new nascent asset class called Bitcoin and crypto, difficult. Call or email us. We're an Australian-based, Melbourne-based registered business, and we can take care of you. Come along for the ride.
All right, gentlemen, thank you so much for your time. If you guys, again, we've got this book that's about to come out from Tim. I'm going to leave the link there. It's not out yet, but I'm going to leave a link there so you can subscribe to the email so you get a notification when it comes out. And I got the links to these two gentlemen if you want to find their websites. It's easy, link in the description. I want to thank Rami for coming in last minute. Really appreciate it. And if you want to actually support the show, guys, click the link in my bio. I've got a PayPal if you want to drop us a donation. God bless you guys. I'll see you later. And stay out of the trees. Ciao.